What if I told you a massive wave of opportunity is heading directly for Canadian homeowners? This isn't a maybe, it's happening right now. An estimated 60% of all Canadian mortgages are up for renewal by the end of 2026. For millions, this is a chance for a powerful financial reset. While the ultra low rates from a few years ago have changed, that doesn't mean you can't secure a fantastic deal today. Many homeowners who locked in around 2% are now looking at renewal offers of 4% or higher, which can feel like a significant jump. But right in the middle of this changing landscape, a huge window of opportunity has opened. The Bank of Canada has started cutting interest rates, and as of late 2025, the policy rate is sitting at 2.25%. Now, to be clear, this doesn't mean your next mortgage will be at 2.25%, but it has created a unique and positive moment in the market. This shift could save you thousands on your mortgage, but only if you act fast and, more importantly, act smart. As a realtor, I guide my clients through their biggest financial decisions every day. And right now, I see a huge number of homeowners missing out because they aren't aware of their new options at renewal. This video is your guide. I'm not here to give you vague tips. I am handing you clear step-by-step playbook with the exact refinancing and renewal strategies that will put the most money back in your pocket. We are going to break down what you need to do starting right now. Before we get to the strategies, let's talk about the number one way homeowners leave money on the table at renewal, by simply signing the first letter their bank sends them. Your bank is counting on your loyalty and the convenience of just signing on the dotted line. That first renewal offer they mail you, it's almost never their best rate. It's their opening bid. It's a test to see if you're paying attention. If you do nothing, you'll be rolled into whatever term they have offered, and it likely won't be the most competitive one available. Think of it this way. When your car insurance is up for renewal, do you just accept the new premium, or do you take a few minutes to see what other companies are offering? Your mortgage is your single largest expense. Giving it that same attention can save you tens of thousands over the life of your loan. Even the Government of Canada advises homeowners to shop around and negotiate. When you have competing offers in hand, you can go back to your current lender and ask them to match or beat a better rate you have found. You hold all the power in this negotiation, but only if you're willing to do a little homework. And thanks to a newer rule, that homework just got a whole lot easier. This is one of the most important and positive updates for mortgage holders in years. As of late 2024, if you have an uninsured mortgage and you are doing a straight switch to a new lender at renewal, you no longer have to pass the mortgage stress test. Let's quickly break down what this means. A straight switch is when you move your mortgage to a new lender, but don't increase your loan amount or extend your amortization. Previously, doing this required you to requalify at a rate that was 2% higher than your contract rate, or at 5.25%, whichever was greater. This was a huge barrier that often kept homeowners with their existing lenders, even if those lenders were offering uncompetitive rates. Now, for uninsured mortgages, which is any mortgage where you had a down payment of 20% or more, that barrier is gone. This is a complete game changer. It creates real competition among lenders. It means you are now free to shop the entire market for the absolute best deal. Lenders who want your business now have to fight for it with better rates and terms, because the wall that kept you locked in has been knocked down. This one rule change is the key that unlocks your ability to find a much cheaper mortgage. Knowing the rule is one thing, but using them to your advantage is another. So let's get into the step-by-step playbook for this new landscape. Step 1. Start early. Don't wait for your lender's renewal letter to show up 21 days before your term is up. You should start this process 4 to 6 months before your mortgage matures. This gives you the time you need to gather the documents, check your credit, research other lenders, and negotiate without feeling pressured. Most lenders can hold a new lower rate for you for up to 120 days. So there's really no downside to starting early. Step 2, know your break-even point, the penalty. But what if your renewal is still a year or two away? With rates having come down, you might be tempted to break your current mortgage to grab a lower rate now. This can be a fantastic move, but you have to do the math. The key is understanding your prepayment penalty. If you have a variable rate mortgage, the penalty is almost always just 3 months of interest. This is usually a pretty small and manageable cost. If you have a fixed rate mortgage, the penalty is typically the greater of 3 months interest or something called the interest rate differential, IRD. The IRD is a more complex formula that basically charges you the difference between your rate and the lender's current rates. Be aware that this calculation can vary quite a bit from lender to lender. You must call your lender and ask for exact penalty amount to break your mortgage today. Once you have that number, you can figure out your break-even point. For example, if the penalty is $6,000, but a new lower rate will save you $300 a month, your break-even point is 20 months. If you have more than 20 months left in your term, refinancing could put you way ahead. Step 3, shop like a pro. Now it's time to go shopping. This doesn't just mean checking the big banks. Get in touch with mortgage broker. Brokers work with dozens of lenders, including online-only lenders and credit unions that often have more competitive rates. And when you shop, you can now tell them you're looking for an uninsured switch, which doesn't require the stress test. This opens up doors that were previously closed. Get a few offers, get them in writing, and don't be afraid to let lenders know you are talking to other competitors. I get it. This can feel like a lot. Calculating penalties, comparing dozens of lenders, and negotiating terms is basically a part-time job. If you would rather have an expert in your corner to help guide you through this process and connect you with trusted mortgage professionals who can handle the negotiation and guarantee you get the best deal possible, that's what my team and I do all day. Click the link in the description to book a free, no obligation consultation, and we can build a personalized strategy for your entire real estate journey. Step 4, choose your weapon, fixed versus variable. Once you have offers, you have to answer the big question for 2025 and 2026, fixed or variable. A fixed rate mortgage offers stability. Your rate and payment are locked in, protecting your money from future rate hikes. Current 5-year fixed special are hovering in the high 3% to low 4% range. A variable rate mortgage moves with the lender's prime rate, which is tied to the Bank of Canada's 2.25% policy rate. This means variable rates are often lower to start with, some available in the high 3% range. The risk? If the Bank of Canada starts hiking rates again, your payment could go up. So what's the right call? Economic forecasts from major banks are mixed, with some predicting rates will hold steady through 2026, while others see another potential cut or two. This choice really comes down to your personal risk tolerance. If you need payment certainty to sleep at night, go with a fixed rate. If you are comfortable with a bit of fluctuation and want to take advantage of today's lower variable rates, that could be a winning move. Step 5, negotiate beyond the rate. A great mortgage isn't just about the interest rate. When you are negotiating, you can also push for better features. Can you get better prepayment privileges? The ability to pay off an extra 15 to 20% of your mortgage each year without a penalty can save you a fortune in interest. What about extending your amortization? If your main goal is to lower your monthly payment, refinancing and stretching out your amortization can provide serious cash flow relief. But, and this is a big but, while this lowers your prepayment today, it means you will pay much more interest over the life of the loan. Use this strategy wisely and with a clear understanding of the long-term costs. Let's see how this all comes together with a hypothetical example. Let's imagine a homeowner. We'll call her Sarah. Say she bought her home in 2021 with a 500,000 uninsured mortgage at a 5-year fixed rate of 1.99%. Her monthly payment was about 2,115. Her renewal is in mid 2026. Her bank sends her a renewal letter offering a new 5-year fixed term at 4.79%. Her new monthly payment would be 2,840. That's a significant increase of 725,000 every single month. But Sarah follows the playbook. 4 months before her renewal, she contacts the mortgage broker. Since her mortgage is uninsured, the broker shops it to multiple lenders who don't require her to pass the stress test. She finds a lender willing to offer her a 5-year fixed rate at 4.14%. Her new payment, 2,675. By spending just a couple of hours shopping around, she saved herself 165 every month. That's nearly 2,000 in the first year alone, and almost 10,000 over the 5-year term. That is the power of being proactive. The next couple of years will see the biggest mortgage renewal event in Canadian history. For many, it's a period of significant change as payments adjust. But it absolutely doesn't have to be a source of stress for you. The game has changed in your favor. The combination of recent rate cuts from the Bank of Canada and, most importantly, the removal of the stress test for many mortgage switches has handed a huge amount of power back to you, the homeowner. Don't be passive. Don't just sign what your bank sends you. Remember the steps. Start early, know your penalty, shop around aggressively using your new stress test free advantage, and negotiate on more than just the rate. Taking these actions will ensure you don't just navigate this renewal wave, you can actually thrive in it by locking in a mortgage that's cheaper than you thought possible and keeping thousands of dollars right where it belongs, in your pocket. If you're ready to take control of your mortgage but want an expert to guide you through the process and connect you with the right professionals, my team and I are here to help. Click that link in the description to schedule your free strategy call today. We'll map out a plan that aligns with your real estate goals. And if you've got value from this video, please subscribe and hit the notification bell so you don't miss our next one. I read every single comment, so let me know down below, when is your mortgage up for renewal? Let's start the conversation.